Tech and luxury stocks under pressure after disappointing updates from giants ASML and LVMH. Welcome to Market Insights. I'm Ramzan Karimali. Shares in semiconductor companies in the US and Asia all fell after Europe's biggest tech firm, ASML, cut its annual sales forecast over weak non-AI chip demand. Similarly, shares in the likes of Kering, Hermes and Burberry stumbled after the world's biggest luxury group, LVMH, reported weak Q3 sales, partly down to weak demand in China. Well, to help us look at both tech and luxury stocks in more detail, I'm joined by Janet Moy, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for joining us. Well, let's start with LVMH. It's posted its first quarterly sales decline since the pandemic. Now, we know that China is important for the luxury sector, and these results probably don't take into account the recent government stimulus measures. But will they actually make any difference?
Yes, indeed. I think, there has been some macro pivot, as in the government has been gradually easing policy over the year. But I do think that it will take quite some time because I think so far the policy direction has been lacking in direct stimulation in consumer demand. We're hearing more noises on that, but we don't have any concrete plans and we don't know the quantum of that. So I would expect if there's any recovery, probably 2025 would be a better bet. So I think these luxury sectors, they will still be under pressure unless we see more forceful stimulus measures. But ultimately, I think Chinese consumers remain cautious on that discretionary spending because of the economic outlook. It will take some time for that mindset to have a turnaround.
Now, next week we hear from Kering and Hermes. Should we expect something similar or maybe even worse, considering LVMH is kind of the sector's bellwether?
Well, I think that the results could be as bad or even worse, given that LVMH already is a leader, and they have been able to defend their margin relatively well because they don't need to cut prices. They're not pursuing that strategy. So overall, still pretty much, I think consumers, if you buy a luxury brand, you will differentiate between the true luxury and the less so luxury. And I think Kering probably fall into that category of less, not really that true luxury as perceived by Chinese consumers these days. So perhaps they are going to struggle a little bit more. But having said that, their share prices have already taken a bigger plunge over the year. So, there could be a negative reaction, but I guess a lot of bad news is in the price.
Well, let's move on to ASML. It's Europe's biggest tech firm. Not only did the chipmaker accidentally post the results a day early, the results got a massive thumbs down from investors. What's going wrong with ASML?
Yeah, indeed, the results, I think the guidance has been particularly disappointing. I think there are a number of reasons. So first of all, I think is key customer, China, I think lots of pressure on there. There are restrictions in terms of what they can export to China. I think there have been a lot of front loading. So in terms of 2025 guidance, that ought to be lower. And also the key customers like Samsung and Intel, they have their own troubles trying to cut costs and scale back on capacity expansion. So again, that impact ASML's guidance as well. So I think there are some company specific issues, but also the market, because you see that actually the AI related spending remains very strong, but unfortunately the semiconductor industry, a large proportion is still non-AI, which I think the recovery is taking a longer time to pan out. So I think that affects ASML. So yeah, unfortunately it is disappointing, but I do think the share price reaction is very sharp and could create a buying opportunity for longer term investors.
Now, in Asia, TSMC reports tomorrow. Analysts are expecting big things. Are they right to be so positive?
Yeah, as I mentioned, I think there are differences between the AI and the non-AI spend investment trajectory these days. The AI related areas are still thriving, and I think TSMC is expanding capacity in that area, and definitely the primed foundry to benefit from that as secular increase in AI related chip making. So I think TSMC is going to be a major beneficiary, and they're also increasing capacity in Europe, expanding beyond just Taiwan. So I think this should be beneficial to TSMC in the long term.
Janet Moy from RBC Brewin Dolphin, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.